Hello guys, glad to have you on board again today. Real quick update because there is quite a lot of noise circulating in the social medias around the WTI pricings and all of these things that happened over the latest 48 hours. So there is definitely a complex market situation that we're into. Definitely WTI as $110 is something that is going to make a lot of people talk about. So what are the real implications of it? Is it going to create a market crash? Is it going to destroy growth? Well, we've talked about all of these things earlier this year in the 2022 year forecasts and ahead. And we've mentioned particularly two things in which I'm going to bring a lot of attention to today. The first one being that the value crisis that we're into, and we're going to be even more into in the next few years, have started even faster than I even thought it would. Definitely Ukraine's war has been putting some kind of a fast forward situation to this. But to make it clear anyway and anyhow, it was the plan all along. And to sum up the informations that we said into this 2022 projection and the value crisis ahead of us, well, we said that it is mostly due to one factor. It's of course multi-factor stuff, but the major impactor on this is the fact that people are losing confidence in their native currency, in their local currencies, whether that is the dollar, euro, whichever currency that is worldwide. We're looking for alternative structures. Cryptocurrency seems to be the most favorable ones, or at least the most logical outcome of it. But still, that doesn't mean these markets will go to the moon in a couple of months. It will take years to transition. And there could be some intermediate catalysts that will push these prices up or down, or whatever. But in the meantime, we've said that this value crisis will have real-world impacts before going into the crypto metaverse or whatever, okay? We've said that commodities might very well go dumb within the next few years, and well, it is an appropriate time to start talking about WTI because it's definitely a good example today. The underlying risk that there is with the Ukraine war, and is it going to go World War III or whatever bullshit I've seen all across the social medias today. Well, this is just, I think, one of the many to come disruptions that there will be on valuation metrics over these currencies, or over these commodities, due to multiple factors. But when today I see this with a rising dollar, I really have a bit of a concern, because of course this could mean war is down the corner, but I don't see anything else going down to the same narrative. So eventually the futures markets are wrongly pricing assets, though in that perspective we'll definitely crash out of 10% today in the US. But in the short run, that doesn't seem to be the most statistically probable outcome. So I would say that whatever we have on the WTI feels definitely extreme. And it is. When we look at the 4-hour chart reference context in here, you're rarely going to see this, okay? Because it looks like something that is trending, but we're not. The moving average is not out of the context. So it's definitely not where actual things are happening. Too much noise in here, meaning that the risk limitation is not a 4-hour chart. So when I see people studying this and saying, boy, this is too much, I'm going to short whatever. Make no sense at all, okay? Daily charts, well, definitely can see that something's going out of the ordinary in here. And even if I was putting the prices off, we know that this is far off value. The current value was on this channel, and we can see that this channel has been dealt with very low volatility. Low volatility means the market knows where to go. We know the future. Well, we do not. Though there could be kind of a bullish trend in here, but it's preceded by a bear trend. So, boy, we do not do price like that. So that means this is the sign of a bigger time frame range, and we have to find it. Okay, weekly charts, and I still don't need the prices. I see that the prices are squeezed out, so we lack of volatility in here, and boy, we're trading here, which means we're far off value. So definitely something has been fucking up the structure. We had a preceding downtrend in here, so we're going right above a preceding downtrend. Oh boy, not going to make it. We still have a lot of anomalies. Okay, here we have something in which the WTI could kind of make sense. And even in the monthly fucking chart, we're off value. That tells us one thing, okay? This is where we value WTI on the monthly fucking reference time frame. So, first and foremost, when I see everyone pulling out some short-term charts, it's really, really dumb. And it's just, once again, the sign of their immaturity. It's really going on the larger time frames, and even the monthly chart is off value now. So when we're off value means either we are into some external catalyst, and like we said, could definitely be some war stuff going on. But despite that, I think that we're mostly in the value crisis that we've talked about, meaning that the war is just the best possible underlying structure to push prices up, but it's not necessarily what does that. I still stand to believe that no other markets price in the same risk, so it really is a one thing around the WTI today, in which, well, it's the asset of the moment, so we're going to turn it as stupidly irrational as possible, and then, of course, we're going to go back to normal. So we need to study that range, okay? It is where we wanted to find a range, and this is where the range currently is. We're trying to break out of this range. So first and foremost, is this range mature? Yes, it is. Let's count the boundaries. Down, 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 down. Okay, definitely a lot of boundaries there. It has been preceded by a trend, so there's definitely a lot of risk management around the third range boundary. It has been a bear one, so it is a bearish third range boundary. It has reached out its target by breaking the previous low point, and we have made 1, 2, 3, 4, 5, 6, 7 range boundaries so far. The 7th range boundary we're experiencing now is retesting the third range boundary. So I think I got the story. There's no need to talk about Ukraine or bullshit or whatever. I mean, Ukraine's war is definitely something, but we're talking about a range in which we're into from the 2008 crisis. So we're talking about stuff. I mean, we had much more than the Ukraine's crisis in these motives. We had all of the Euro crisis thing. We had the subprime mortgage crisis. We had the Iran problem. We had Rocket Man. What the hell was that? North Korea. So all of these things, okay? Lots of military conflicts has been happening since that time frame. So it is definitely concerning to leave this one at the moment, and like I said, and I'll say it again, it is not pleasant to see a humanitarian crisis like that coming along with the military implications. But still, in trading, we do not care about that, okay? So in terms of trading, we care about this asset, and is it overvalued, undervalued, should we buy, should we sell, whatever, okay? We're dealing with third range boundary area, so there's one thing I can tell you, it's not an appropriate time to buy, but if you want to short sell something that is breaking out of resistance context just like that, well, I don't really think it's worth it, because I personally think that we're going to stay there for a longer time than you think, okay? It may be volatile, but you can be damn sure that the previous supports are surrounding $88, and I definitely think that we're never going to break that third range boundary, at least not for now, because look at where we come from. We come from the extremely oversold clusters that we've experienced previously, and the market is behaving in cycles. So everyone is thinking that we're going to break or whatever. I don't think it's ever going to happen. What I think is going to happen instead is that we might try to trade around the third range boundary, volatilely or not, because I can hardly predict how dumb the prices will be in the next couple of months. But in the short run, I don't think nothing is going to happen. We're at the maximum level we could go. We could try to break, but of course there's not going to be any sustained prices over there. We're not going to break because nothing suggests we're going to do such a thing. Everything suggests we've just gone straight line down to up. We've gone from extremely oversold cluster to extremely overbought cluster. We're dealing with a very dense technical area now. So prices may look dumb, but we are not in dumb territory. We're in a territory I thought we would go anyway, the third range boundary, but I never thought we would be doing in a straight line. Statistically speaking, odds to see these kinds of happening are very low. We've had here a very complex situation. Just to sum up, everyone was trying to figure out what the hell was going on with WTI. It was irrational, whatever. No, it was the contango effects. So those who say we've had irrational bear prices, so we're going to do irrational bull prices and go back to the mean, I would say no, that makes no sense. We will break out of this range to the upside. The question is how and when. I definitely don't think now is an appropriate timing, neither due to the war stuff or whatever that is. These are short-term catalysts that push prices faster. But that doesn't mean these things can break out of 2008. It's like a 15 years range. So it will take probably bigger than the Ukraine's war in order to get out of it. Okay, it's going to be longer than that, and understand the value crisis we're in now. We're just shifting prices up, down, down, up to make people crazy, but the value itself isn't going to change now. It will over the next few years, and I very well stand for this. But before we break out, we're going to need to build a bear cycle and break it, which means we're going to have the range, and then we'll eventually break. And out of this range, understand that there could be some deep retracement still. So don't write the story of tomorrow out of what's happening right now. Yes, right now we're pricing all the shit that we could get out of this world. Basically, inflation, war, it's going to be an absolutely dystopian future if you listen to the news now. Well, look at everywhere around you. I don't see that thing actually happening. Yes, it's trouble everywhere in Ukraine for so many people out there, but still, the rest of the world does pretty much exactly the same as it did a month ago. So I don't think these rational pricings will eventually reverse, but you need to understand that we're probably not going to break out of these things. So how volatile is it going to be in the next few weeks and months? I don't know, but I still think a range is going to emerge. History tells us that last time it's been damn stupidly volatile as well. I wouldn't be surprised if that time there was approximately the same structure or kind of volatility. Okay, so going back to the mean is possible, but anyway, it's not going to last very long. The best we can get is a very volatile range. The worst we could get is stay the fuck there and eventually get just a dip before going up. Okay, so I still believe that we're gonna get cheaper prices for gold and oil and all of these things, so just be patient. But now is not an appropriate time to buy, nor an appropriate time to sell, because these assets will be more expensive in the future. And a war, if it turns out to really be a thing, and it could be, it's very less likely, but it could be, though that means, how the hell can you short sell such an asset? It has higher value and will have higher value 5 years from now. And we're talking about a monthly range, monthly time frame. So it means that everyone's looking at short-term things. This makes no sense, okay? You need to look at this market on a month-to-month basis. And more importantly, if you're trying to sell, you have to understand what you're doing, what you're dealing with. You're dealing with financial products which have expirations, rollover costs, swap costs. This won't be an easy thing to roll over to the next expiration and so on. This will have implied costs that you not necessarily think of. So don't dare trading assets that you don't necessarily understand when you're most importantly trying to fight against something. Yes, we're in an interesting area. Yes, prices could retrace, but where? Does that mean it's going to happen there? No, we hardly can value the short-term momentum in the monthly charts. So yeah, we could reverse out of this. We could add an additional $15. That wouldn't be any problems because this is about monthly closes. So in the short run, when we have that kind of momentum, do you really want to fight against that and short sell it? Well, good luck with that. Okay, I personally took a stop loss yesterday out of $100. I had an arbitrage out of WTI and gold, took my profits on gold, and I just took a loss on WTI. So this is kind of a draw. I've gone flat on this one, made some gains, made some losses, and well, pretty much I'm going to go back to normal. So I could have made money if both were going in the direction I wanted. Turns out WTI did not. It took out my losses. Okay, so I'm moving on. Okay, I just took some losses on the weekly charts. I'm certainly not going to double down and short again. So really a cautious message for you guys out there. We're definitely in an interesting technical area, but it is monthly based and we're just like 1 day into March. So I would really recommend you guys to understand that this is going to take longer than you probably think. And that the implied cost of futures contracts is not necessarily something you understand. Most importantly, when it is on the one that has so much external costs of storage or whatever, supply, demand, it's really that complicated. So don't go down this road. But most importantly, the second mistakes I've seen is very much out there is people trying to make sense of this. Like $110 means the war is over, is coming along the way. Well, it's not. Or overinflation will crash the US economy. Well, no signs of it so far. So what's going to happen with cryptocurrencies? Do we need to sell the crap and buy some oil or whatever? No, this just means I think these are isolated things. There's no such a thing as correlation and logic in the market. We're going absolutely stupid into this crisis that's ahead of us within the next few years. And we're getting closer to it. But we're talking about years, okay? So don't ever convince yourself that this is going to happen tomorrow. Be aware that it can, but that it very likely won't. So until then, I know how complicated it is to navigate with these ideas in the mindset, to know that we're headed into some major value troubles years ahead of now, but not that many years ahead. But still, few years, probably a couple of years at best, at least. So I know right now everything may sound dystopian and stupid and we're going to die tomorrow, but if you turn out to just look around you, it's not. So there are some seriously concerning situations around there for people who are near the crisis point right now. But the rest of the world, well, just look around you. We're not dying, okay? So understand that the market is going for emotions and you must not fall for it. And most importantly, you must not react out of it, whether that is WTI itself or the rest of your trading strategies. If you take a stop loss on WTI, well, that's a stop loss on WTI. That doesn't mean you have to manually trigger an exit of your other strategies. That is number one mistake. Mistakes I've made in the past and I no longer do today, so please don't do them, okay? If you took a stop loss on WTI, well, move on to other trades, but they must not trigger correlated effects. Be also aware that if you took a stop loss, trading again on the same asset is the best possible way to go on fight, flight, or denial type of response, which is the worst for you out there. Okay, took a loss, move on to another asset. Let this one trade for a little while before you eventually go back to it. Okay, and most importantly, for those who do not have WTI trades, I sincerely suggest you don't put your fingers in there. That being said, all the warnings have been said, okay? Keep up your ongoing scenarios. Forget about WTI for a little while. It might be stupid, but we need to look at it on a monthly base chart. Bye, guys.